If you've been following any of the real estate investing blogs or YouTubers out there, you've probably heard about something called the BRRRR method of real estate investing. So what really is the BRRRR method? Is it right for you? Do you have enough money or time to do it yourself? And is it something you should pursue if you're just getting started investing in real estate? The short answer is it really depends what your goals are. If you're looking to acquire a number of properties like 1, 2, 3, and eventually 5 or 10 per year, and if you're looking to actually rehab those properties by putting in tens of thousands of dollars, even hundreds of thousands of dollars to fix them up, and if you're interested in becoming all aspects of real estate investor like hunter, wholesaler, rehabber, landlord, and ultimately learn a bunch of things about finance and how real estate really works, then definitely the BRRRR method could be the best opportunity for you to start investing in real estate. So first, let's get into what exactly is the BRRRR method, what does the BRRRR stand for, and why is it such a big thing right now in real estate? So BRRRR stands for the following: buy, rehab, rent, refinance, and repeat. With those 5 components, you can see how you need to learn multiple different aspects of real estate and finance in order to make this opportunity work for yourself. So the BRRRR method is a tried and true real estate investing strategy that's actually been going on for many, many, many years. And it's a way that you can actually rapidly invest in multiple pieces of real estate, one after the other, while getting all or most of your capital back each time you get into a property, and actually paying little to no taxes on all of these investment opportunities. So what's so special about the BRRRR method, and why is it all the rage right now? So with the BRRRR method, you're actually combining 2 very important, very popular strategies: fix and flip and buy and hold into one. And if you can find enough properties that need significant work to the point where you can buy them for, let's say, $100,000, put $25,000 into them, and make them worth $200,000 or $300,000, you've just done exactly what every real estate investor wants to do. And that is forcing equity and making the buildings worth a lot more than the time and money you put into them. So the ultimate strategy is to find properties, fix them up, get renters in them, refinance out your very expensive debt or the cash that you've put in to buy and fix the property, and ultimately enjoy having dozens, if not hundreds, of renters pay you rent every single month that you use to then go pay off your 3 or 4% mortgage. The second advantage to the BRRRR method is that it allows you to recycle your cash multiple times without actually paying any capital gains tax at all. Because you're buying properties using hard money or even your own cash or loans, and then refinancing out that very expensive debt with low interest long-term debt, you can leverage cash out refinancing as your secret weapon to putting money in and getting it right back out in 6 to 12 months after investing in a property. And few other investment opportunities allow you the ability to put money in, put a bunch of debt on an asset, fix it, make it worth more, and then get your money all the way out and still maintain 100% ownership of the asset. The next advantage to the BRRRR method is that you can actually acquire multiple properties without having to raise a bunch of cash. Remember, you're getting the purchase price, the rehab price, and even some of the holding costs out of your investment if you invest wisely, which means that you can put $100,000 or $200,000 into a property, get a renter, refinance it, and get $100,000 or $200,000 back out, and then recycle that back into the next deal where you will do the same exact thing every single time. So if you can identify enough properties, flip them, get renters in, and you have a really good lender who will give you your cash out within 6 months of renting it out, you can invest in 2 or 3 properties a year with a mere $50,000 or $100,000 cash investment. And that can help you acquire dozens, if not hundreds, of properties in a rather short amount of time. And this is completely different than putting 20 or 30% down on a regular rental property, which is the way that most people think of investing in real estate. And finally, with the BRRRR method, if you do it correctly, you won't pay tax on your real estate investments at all. Remember, you're not selling the asset, which would trigger capital gains of long-term or short-term if you do what most people do, or even ordinary income if you're a professional house flipper. And those tax rates can be 20, 30, 40, even 50% depending on where you live and how much money you make. But if you never sell the asset, you never pay capital gains, and the only taxes you're subject to pay are the income tax on the rents that you collect if the rents exceed your tax deductions. But even then, there are many ways to get depreciation or excess bonus special depreciation on your real estate assets if you work with your tax advisor who knows how to help you do that. I've got plenty of investor clients who pay $0 in tax because they move properties, they invest in properties, they use tax deductions and depreciation and other investment vehicles to get income and cash flow from their assets without paying really any tax at all. So with the BRRRR method, because you are actually becoming a buy and hold investor and you're never actually selling the asset at all, you can get a lot of cash in and out of a deal without paying any capital gains or ordinary income tax on that transaction. And finally, the obvious reason is if you can invest in a bunch of properties, if you can learn real estate investing without putting your entire financial future at risk, if you can build a network of wholesalers and agents and lenders and property managers and other contractors to help you build your real estate career, the BRRRR method combined with other investing strategies can be a really good way for you to diversify your future wealth, generate lots of cash flows, even tax-free, and acquire a lot of real estate assets in a rather short amount of time. So hopefully this is helpful and you learned a thing or two about the BRRRR method of investing. Post your questions or comments in the comment section below, and be sure to subscribe to our channel so you can get more videos, tips, and tricks on tax and investing just like this every single week.